Welcome back. Well, if you are a mortgage holder, I don't need to tell you that the RBA lifted its official interest rate by 0.5% this week. That is the biggest one or single jump in 22 years. The hike will have a pretty significant impact on renters too, as investors are driven away from the property market. This is combined with an already a lack of supply of housing for rental purposes. Joining me live now is the Chief Executive Officer of REA Group, Owen Wilson. Owen, good to see you once again. First of all, what are you seeing? Does this kind of move by the RBA have an immediate impact?
It's definitely got an immediate impact on house prices. We've seen some softening in the house prices already this year, and we predict that will continue as we get this rate rise and probably the rate rises that everybody's predicting either next month or in the coming months. We'll see some softening, and maybe that will help attract investors back to the market, because what we've seen over the past couple of years is a lot of investors leaving the market, causing a huge rental shortage. At the moment, rental vacancies are sitting at almost a 10-year low, and there's a lot of reasons that have caused that. Firstly, there's been a lack of supply, both because of zoning permissions, approvals for developments, particularly multi-level developments. We've seen investors leaving the market considerably in the last 2 years. At the moment, as we sit here today, the percentage of sales by investors is running at about 25%, and the percentage of purchases by investors is only running at about 5%. So we're going to see a continuation of that decline in rental stock.
Right, so at the moment, investors are looking to get out before, I guess they're looking at further declines in the market, and a very, very small amount of people looking to buy these properties as investments as well. So I guess on the face of it, more home ownership is looking good for perhaps the short term, but for the renters, it's really a crisis.
I think we are heading to a rental crisis. We've seen rents, advertised rents on realestate.com.au increase 10% in the last 12 months.
Wow.
And with that continuing reduction in supply, we forecast at least double-digit rent increases in the next 12 months. And it's a part of the housing market that doesn't get a lot of attention. There's a disproportionate attention on house prices and the impact on mortgage holders. But there's a big proportion of our community who rent and can't afford to buy, and increases in rents of this magnitude is definitely going to cause some pain.
You've got all the data available to you. So with what you see, are there areas that are particularly bad or particularly good?
It is right across the board, and it's been the combination of quite a few things. We saw a lot of investors exit the Melbourne and Sydney CBD markets throughout the pandemic. And that was ironically because they couldn't find tenants. And what was happening is they were selling their properties and they were being purchased by owner-occupiers. So they're coming out of the rental stock. We also saw a lot of shared accommodation break up. People realised they couldn't work on Zoom in a shared accommodation setting, and so they went out and got their own properties. And so that took a lot of stock out of the market. And then the other experience we saw through the pandemic, we saw a lot of people purchasing second properties, that lifestyle purchase, whether it be near the beach or in the country. And again, that took a lot of rental stock out of the market. So it's been this kind of perfect storm, coupled with the insufficient supply coming into the market.
Owen, at the summit yesterday, you made a really good point that this is not doomsday just yet, because we are coming off the back of huge increases year on year in the property sector. So with interest rates at 0.85% at the moment, yes, they're climbing as well, and some economists and experts predicting maybe a 10% decrease in house prices over the next year or so. It's really not as bad as it sounds. I mean, if you own that asset and you need to sell it, it's bad. But really, you've got to take a big picture approach, don't you?
You do. As we spoke about yesterday at the summit, interest rates below, a cash rate below 1%, people would have only dreamed about that 5 years ago. And we are coming off emergency rate settings. We can see the demand for properties on our site, and there's still a huge level of demand for properties, and that will underpin house prices. They will soften for sure, but we're still up 14% on this time last year in house prices. So even a 5 or 10% reduction from here would still mean we're up year on year. We're up 35% on pre-pandemic levels. And so people are not going to be sitting on losses in the price of their houses unless you've purchased in the last few months. And the people who are buying and selling in this market now are doing so with the absolute knowledge that rates are going to go up. The other thing that will underpin demand is, we spoke about this at the summit yesterday, the absolute need to reintroduce skilled migration into the country.
Yeah.
And as we bring in skilled migration, they need somewhere to live. Now, that is going to reduce the level of rental stock in the market, but a lot of those people will also buy, which I think will help underpin house prices.
That's really interesting and a good point to highlight once again, because we were talking to the boss of Crown, Business Council CEO Jennifer Westacott as well, and they are desperate to get more migrants back into Australia as soon as possible to fill those job vacancies. But you come at it from a different perspective from the housing market, really filtering all the way through the economy. What do you need to hear from the federal government in that sense?
On migration, look, we feel it as well. We have hundreds of roles vacant for skilled workers, particularly in IT, engineering and developers and the like. And it's got to the stage where we've almost doubled the amount of development that we undertake offshore because we just can't get the people here. We'd love to do a lot more of that work onshore, and so bringing in that skilled migration is going to help with that. But it will also, as I said, we bring in the right migrants, they will help the economy, they'll help fill some of the 400,000 jobs that are vacant at the moment, and they will underpin our property market.
Before I let you go, Owen, we always talk about, the need for better relations between the state and federal government. Are you glass half full or glass half empty when it comes to getting any meaningful change here when it comes to the supply side of housing?
I'm probably glass half full and glass empty. I think there's a real understanding of the challenge we've got, and there are some sectors that could solve for this rental supply in particular that are big parts of other economies. In the UK and the US, the whole build-to-rent segment is a big part of the rental stock and rental supply there, and that's just not commercially viable in Australia, and that's because we've got some tax anomalies. They're residential properties, but for GST they get treated as commercial. It's an easy fix by the federal government. And then there are some land tax anomalies that the state governments could fix to make that attractive. The superannuation funds in Australia have a lot of money to invest in this space because they're long-term assets that give a yield, and they provide really high-quality rental stock. It's something we need, it's something that could easily be fixed, and I'm confident, given this crunch that's coming, that the governments, both federal and state, will hopefully help solve this.
Well, let's hope so. Owen Wilson, great to talk to you. Great to have you part of the summit yesterday. We'll see you again next year and hopefully talk to you a lot more in between.
Great. Thanks, Laura.